Today, I'm diving deep into the real value of money over time, and I'm challenging myself to figure out just how much my cash will really be worth in the future. Money is a fundamental part of our lives, and understanding its value is crucial for our financial literacy. We all know that money can't buy happiness, but it can certainly provide us with security and freedom. The value of money is not constant, it changes over time, and that's what we're going to explore today. The value of money is influenced by various factors such as inflation, economic growth, and government policies. As time passes, the purchasing power of money decreases, and that's why it's essential to understand how to make our money work for us. We need to be aware of the factors that affect the value of money and take proactive measures to protect our financial future. The concept of money and its value over time is complex, but it's vital for making informed decisions about our finances. Inflation is one of the primary factors that affect the value of money. As prices rise, the purchasing power of our money decreases. This means that the same amount of money can buy fewer goods and services than it could in the past. Understanding inflation is crucial for managing our finances effectively. We need to consider the impact of inflation on our savings, investments, and spending habits. By doing so, we can make informed decisions about our financial future. The way we perceive the value of money can also influence our financial decisions. If we understand that the value of money changes over time, we're more likely to make smart investment decisions and plan for the future. The value of money is not just about its face value, it's about what it can buy us today and in the future. By acknowledging this, we can take control of our finances and make the most of our money. Most people assume that saving money is the best way to preserve its value, but that's not entirely true. Inflation and economic changes can erode the value of our savings over time. We need to find ways to grow our money at a rate that's higher than inflation to maintain its purchasing power. This is why investing and financial planning are essential for protecting our financial future. Many people are unaware of the impact of inflation on their savings, and that's why it's crucial to educate ourselves about personal finance. The misconception that money preservation is the best way to protect our wealth is widespread. However, this approach can lead to a significant loss of purchasing power over time. We need to be proactive and find ways to grow our money, rather than just saving it. This might involve investing in stocks, bonds, or other assets that can provide a higher return than traditional savings accounts. The key is to find a balance between saving and investing to achieve our financial goals. Inflation is not the only factor that affects the value of money. Economic changes can also have a significant impact. Economic downturns, recessions, and currency devaluations can all reduce the value of our money. We need to be aware of these risks and take steps to mitigate them. This might involve diversifying our investments, hedging against currency fluctuations, or adjusting our spending habits. By being informed and adaptable, we can navigate economic changes and protect our financial well-being. Another common misconception is that the value of money is constant, and it's not affected by external factors. However, this is far from the truth. The value of money is influenced by a wide range of factors, including government policies, interest rates, and global events. We need to stay informed about these factors and adjust our financial plans accordingly. This might involve seeking the advice of a financial advisor or conducting our own research to stay up to date with the latest developments. Historical context is essential for understanding the value of money over time. We can learn from past experiences, such as hyperinflation and currency devaluations, to inform our financial decisions. For example, the hyperinflation in Zimbabwe or the currency devaluation in Venezuela can teach us about the importance of protecting our wealth from inflation and economic instability. By studying these examples, we can develop strategies to mitigate the risks and protect our financial future. The value of money has changed significantly over time, and it's essential to consider this when making financial decisions. We need to look at the historical context of money and how it has been affected by various factors. This will help us to better understand the current trends and make informed decisions about our finances. The key is to be aware of the factors that influence the value of money and to take proactive measures to protect our financial well-being. In the past, we've seen many examples of currencies losing their value due to hyperinflation or economic instability. This has resulted in significant losses for individuals and businesses, highlighting the importance of protecting our wealth from these risks. We can learn from these experiences and develop strategies to mitigate the impact of inflation and economic changes on our finances. By being informed and proactive, we can navigate the complexities of the financial world and achieve our goals. The current trends in the financial world are complex and multifaceted. We're seeing changes in interest rates, inflation, and economic growth, all of which can impact the value of money. We need to stay informed about these trends and adjust our financial plans accordingly. This might involve seeking the advice of a financial advisor or conducting our own research to stay up to date with the latest developments. By being aware of the current trends, we can make informed decisions about our finances and protect our wealth. Investing and financial planning are essential for protecting our wealth from the decreasing value of money over time. By investing in assets that grow at a rate higher than inflation, we can maintain the purchasing power of our money. This might involve investing in stocks, bonds, or other assets that can provide a higher return than traditional savings accounts. The key is to find a balance between saving and investing to achieve our financial goals. Investing is not just about growing our wealth, it's also about protecting it from inflation and economic changes. We need to be proactive and find ways to grow our money, rather than just saving it. This might involve diversifying our investments, hedging against currency fluctuations, or adjusting our spending habits. By being informed and adaptable, we can navigate the complexities of the financial world and achieve our goals. The importance of financial planning cannot be overstated. We need to have a clear understanding of our financial goals and develop strategies to achieve them. This might involve creating a budget, investing in a retirement account, or seeking the advice of a financial advisor. By being proactive and informed, we can protect our wealth from the decreasing value of money over time and achieve our long-term financial goals. In conclusion, the value of money changes over time, and it's essential to understand these changes to make informed financial decisions. We need to be aware of the factors that affect the value of money, such as inflation and economic changes, and take proactive measures to protect our financial future. By investing in financial planning, we can counteract the decreasing value of money over time and achieve our long-term financial goals. The key takeaways from our discussion are that the value of money is not constant, and it's affected by various factors such as inflation and economic changes. We need to be informed and adaptable to navigate the complexities of the financial world and protect our wealth. By understanding the historical context of money and the current trends, we can make informed decisions about our finances and achieve our goals. In summary, the value of money over time is a complex topic that requires our attention and understanding. We need to be aware of the factors that affect the value of money and take proactive measures to protect our financial future. By being informed and proactive, we can navigate the challenges of the financial world and achieve our long-term financial goals. The value of money is not just about its face value, it's about what it can buy us today and in the future. To recap, the concept of money and its value over time is crucial for our financial literacy. We need to understand the factors that affect the value of money and take proactive measures to protect our financial future. By being informed and adaptable, we can navigate the complexities of the financial world and achieve our goals. Let's discuss this topic further in the comments below, and don't forget to check out another video on investment strategies to help you grow your wealth.